Hi everyone and welcome to today's morning report on Thursday the 21st of April with me, Richard Perry, market analyst at Hantip Markets. It's ECB day and markets are fairly quiet, fairly flat, nothing too much doing. Euro is dead flat as I speak. Equity markets just slightly off, nothing too significant, and this sort of consolidation is likely to happen in front of the ECB because the ECB is a fairly volatile event. There's been a slight turnaround in markets. In terms of the dollar, certainly there was a big rise in treasury yields yesterday, and that helped to drive a rebound in the dollar. And a lot of these markets did turn around on the back of that. Certainly, euro dollar dragging back below 113 figure again, and a rise on dollar yen. Interestingly enough. And it seems to be that markets are now sort of just settling in front of the ECB. But what can we expect from Mario Draghi today? Not a great deal. No real change on rates expected. And to be honest, he's likely to continue to bang the drum, I suppose, for the measures that the ECB are putting into place in terms of the vast quantitative easing and monetary easing stimulus measures. However, there's not a great deal more that we're expecting today because we need to see how these measures are sort of holding up, and also they haven't even started the teltros yet, the four teltros that we've got that start in June. So not really any expectation of any further action, although they could. There's a possibility, I suppose, that they could cut the deposit rate further, but it's very unlikely at this meeting. What else have we got to look forward to today? Well, we've got the Philly Fed Business Index at 130. That's expected to come down to 8.9. So that's still positive, which is I suppose the main thing in this chart. And then also you've got the weekly jobless claims, which are expected to just rise slightly to 263 from 253. So not too much of an increase, but certainly an increase nonetheless. But markets will be focused on the ECB anyway at that time, so I can't imagine it'll be doing too much to influence how they're trading. So my chart of the day is today's silver. Now we've had this huge run higher in silver. Look at that massive breakout. Big gains, 26% in 2016 silver has rallied. Now the big question is this rally going to continue? You got that big resistance initially at 1780. That's the first thing to mention. The other thing is that the RSI at 78 is the biggest since July 2014. So the highest in terms of the RSI since July 2014. Not only that, you've got you're looking out for sort of signs of exhaustion, I would say, therefore, because every time the RSI sort of hits these levels, or in the past hit these levels, it comes off, you get a sizable correction. And looking at the run higher, there is certainly the prospect of a sizable correction if there were to be one that sets in. So we're looking out for signs of exhaustion. Have we got them? Well, there is a bearish divergence now on the RSI. Stochastics rolling over, and MACD lines also bearishly diverging with the recent highs in the last few days. So the question is that enough? Well, probably not yet. Certainly not yet. You'd sort of zoom in here. Sorry. Let's get rid of that and do that. Okay, so you zoom in and you sort of say that, okay, well, yesterday's breakout high of 1723 has become the base of support today. So that's your initial line of support, but I think the main trigger would be if you lost 1680, which was the reaction low pretty much from yesterday. If you lost that as a support, that would be a key level. But at the moment, obviously, we're still seeing the higher highs, and bearish divergences can go on for a while, and there's no real problem. But you would still argue that at 78, the RSI is extremely stretched now, and you'd be looking out for the chances or the signs of profit taking. And the argument I would make is that 1780 is the resistance, 1760, if I can talk properly, was today's high. So you're not a million miles away from all this big overhead resistance that comes in from that Q2 2015 high. So it is arguably getting to a stage at which you're saying, well, upside potential might be becoming limited. So if that's the case, your risk reward basis would suggest that you need to start thinking about taking profits on long positions and looking out for possible corrective signals. So that's how I would look at it. You'd look at the oh, sorry, what have I done there? What have I done? Here we go. This is what I'm looking to do. You're looking at the Bollinger Bands. Still not extreme, you'd argue. You're still touching inside the Bollinger Bands on a daily basis. So you're not necessarily extreme yet, although you are getting to the point at which it could be becoming extreme. You had a similar sort of move higher back in February, and then it sort of tailed off, didn't it, for a couple of weeks, 3 weeks. So this is another strong run higher. Has it got the legs to continue? Is the question. I'm not convinced that there's too much further upside potential. I might be wrong. I mean, certainly the bulls are with this one, but you've got to bear in mind that it's had an incredible run higher already, 26% higher on the year, and yeah, it's that's a huge run, and there is certainly the prospect of a correction near term. And you'd argue if there were to be one, 16.15, that breakout level would be your sort of prime candidate for a retracement. So I wish you good luck in your trading on silver today, and I will speak to you later. Thank you.